Welcome to this week. And holy banana bread, what a year it has been. So, this here is going to be our show where we're going to look back and sort of reflect on 2022 and all that it has brought to us, not only in financial world, but pretty much overall as well. So, I always think of finances as well as finances, one of those things that touches a little bit of everything. So, definitely looking forward to seeing what we got here. Now, I have for you guys today, we are going to count down 10 of the big events or big, I want to call them drivers. So 10 big drivers of what has happened in the world of finance in 2022. So we're going to get to those all in a moment. First of all, right up front, I just want to wish everybody a very happy new year. And I want to thank any of you guys watching this, whether you're here live or whether you're going to be watching it on the replay. I really appreciate all of you guys. You guys have been here for me in 2022, and that means a lot to myself, to the channel, um, and hopefully it means a lot to you guys too, because I think this community is definitely one that is absolutely awesome. All right. Now, this, of course, being New Year's Day, some of you may have had a little bit too much fun last night, and maybe you're maybe you're just getting up. Well, especially if you're on the West Coast. So we'll definitely talk as we go along. So as we go, whatever you guys want to talk about, just throw it up in the comments, and that's going to be fantastic. And we'll just go wherever you guys want to go, in addition to our top 10. So that's going to be cool. And happy New Year's to Jay. It's always fun to see you. Happy New Year's as well to Jordan. And Jordan, of course, wishes everybody in chat a happy new year as well. Awesome. All right. I'm going to start with number 10 right away. We'll just pop this up here, and we got graphics. We got graphics for this. So that's kind of cool. So that our first topic, number 10, what the banana bread is going on with Elon Musk. That was actually a reoccurring theme in this live stream for the first half. I think for the first half of since we moved over to this week. And then, of course, he died off a little bit, but Elon is not disappointed, I think, in 2022. This year, though, it's been a little bit different with Elon. He hasn't had that ability this year to affect the prices of crypto like he did in 2023. But we're going to talk a little bit about crypto and a little bit later. But the big thing with Elon is, of course, the Twitter deal. Elon coming out of the blue and saying, yeah, I'm going to buy Twitter and clean it all up. That started a ball rolling in the world of Elon Musk. A ball that's still going to probably roll into 2023. Now, he went through a lot of issues, of course, with Twitter. Got to the point that they pretty much started to sue each other over the whole deal. But part of it, too, is that collapse. The collapse in the collapse in sort of the market itself overall started depressing Twitter's price. And that really made Elon start second thinking, give him second thoughts as to what he was doing when it comes to, of course, buying Twitter. And we just got a couple more people in the house. So hello, Paul. Happy New Year. And hello, Bonnie. Happy New Year to you, too. And hello, Chris. Happy New Year. Welcome. Chris is my newest channel member. Totally rocks. So Chris and Jay right now are the channel members in the house, which is awesome. All right. So the problem with this Elon Twitter bid is, for one, to get the money, he had to start selling Tesla shares. And when Elon sells Tesla shares, what happens to Tesla? Well, that price starts going down big time. And he's had to sell a lot of shares throughout the year. Like, he sold some for taxes. He sold some for the initial for Twitter. And we're now at a point where Tesla has absolutely collapsed. Now, who would have seen that? Back in January 1st, if somebody asked me, hey, is Tesla a safe bet? I'd be like, absolutely. Tesla is innovative, fantastic company. Elon always tends to come up with great ideas, but this year, not so much. He got himself into a little bit of a pickle, and it's going to be interesting to see if he can reclaim what he once had. I think I read the other day that he has lost close to $200 billion. That's insane. I mean, most people will never even accumulate $200 billion. And I'm already talking most super rich people will never accumulate the amount that he's already lost. So it'll be interesting to see how that's all going to turn out. And Happy New Year, under 49ers. Very cool. Always good to see. It's always good to see people here who I don't see every single time. So that's fantastic. It's actually interesting. I've been told that I say the word fantastic too much. So now every time I say fantastic, I'm probably going to pause a little bit because, well, maybe it's not so fantastic that I say fantastic so much. So we'll have to work on that one. Just if anybody ever comes up to me and says, you say banana bread too much, them are fighting words. We're not going to change that because that is just part of the channel identity now at this point. So that is our number 10 story, of course, is what the banana bread is going on with Elon. I think he is going to continue to be in the news. I hope he can clean up the mess he's gotten himself into. I think if he steps away from Twitter, that would be a move in the right direction for sure. And just quick more hellos. Hello, Patricia. Welcome. Happy New Year. Hello, Jill. Welcome. Happy New Year. Hello, Scott. You came in at the beginning this time, and not the end, which is hilarious. So it's actually funny. I was looking. Scott does a live stream every day. Whoops, still got it there. Just very quickly. Hello, our sapper. Happy New Year. So Scott does, of course, he does a live stream every day. That is, it's at 11 p.m. Eastern. So it's kind of fun because the other day I noticed his thumbnail for the new one, and he's got himself inside of a crystal ball. And I was like, I had to chuckle when I saw that because my prediction video, I had a little video with me inside of a crystal ball, and I'm like, finally, somebody must have liked that. Well, Scott liked it enough to use it, or it's a total big coincidence, in which case Scott and I are on the same wavelength, which is great, not fantastic. It's great. Wow, that's going to be very hard to not use that fantastic word. So we will keep it going. All right. So anyway, that was number 10. What is, Elon Musk, definitely a news driver this year. So let's see what we have in store. We'll get rid of Elon Musk. Let's see what we have up here in number 9. All right. So number 9 kind of ties into the last one. It's the whole collapse of the tech sector. I have seen so many tech companies absolutely plummet in 2022. All you have to do is, well, Tesla, a lot of that's Elon's fault. But Meta, dear God, they gambled on the metaverse and, well, they failed. So Meta has been way, way down. Amazon has been hurt big time. Now, Amazon, it's not really a fault of their own, I don't think. I think a lot of with Amazon is the economy, and we're going to definitely hit a lot of the economy. So I had to do that. Well, just give him a second here. Here's Scott. I caught that and had to scoop it. I didn't know if I'd be able to figure out how to stream in the crystal ball, though. That's really hard, Scott. Because I think a lot of the, like StreamYard doesn't allow me to have a moving background, because it would be great if I could have like a pasture behind me and like farms just eating grass or something silly like that. I think that would be kind of funny, but hopefully that is something that they come up with. 11 p.m. Oh, I meant 11 a.m. Eastern. That's when Scott does his little live stream over there. He's got a good group of people there. So, check it out. Say hi to him. Tell him that you found out about it over here on the live stream. And that's pretty good. Okay, so collapse of tech. So, the collapse of tech has been pretty darn epic. And I know a lot of people have lost some money. Now, if you're an investor in any of the big tech companies or the FANG stocks, you don't have to, you haven't lost anything unless you sell. So keep that in mind. Even with things being down, there's a lot of opportunity out there. And that's what the way I'm looking at it. Uh, for example, companies like Microsoft and Apple, Amazon, Google, those are companies that are not going anywhere. Those are companies that, yeah, they're down big time, which basically means you're getting some great value right now. When they, of course, come back up, what you bought right now, you're going to pick up a lot of value from that, and you're going to watch your share prices grow. And even if you are, this is one of these things I will even say, even if you're primarily a dividend investor, if, as we move towards the bottom, if you start picking up some of these tech stocks and they go up big time, that percentage is going to be bigger than what you would make on dividends. You could always ride them back up in the bear market, in the bull market. I am so used to saying bear market. It's hard to say bull market now, but you could ride them back up and then sell them and, stuff yourself with a lot of great dividends. So that is an option. And if you guys saw my purpose video, we actually looked at some pretty high yields that are all centered around those very same tech stocks. So you've got like an Apple and a Microsoft and a Google. You've even got Berkshire Hathaway. So there's a lot of great stocks in those. So check that video out. Maybe one of those might be something that you could be interested in. Do your due diligence, of course. All right. So that's the tech collapse. It's been a big thing. It really has made an impact because we all know the whole market is in trouble. And we're going to touch on that later because, no spoiler alert, it might be one of the 10. So as we're doing this as well, guys, what I want you guys to do is throw into me, start taking some guesses at, where you think different things that we haven't gotten to yet is at. It'd be really cool. Let's start with number 1. We'll see if anybody, just throw some guesses on what you think number 1 will be, because I think it would be interesting to see what everybody thinks. I have a feeling a lot of people will get number 1 right. So I'm just kind of curious about that. I won't spoil it and say, okay, yeah, you're all right, but it'll be really interesting to see what folks think. All right, before we move to number 8, let's just say hi to the friggin' Oracle. Hello, Ken. It is fantastic. It is great to see you. So for those of you who just joined in, well, 1, you missed that number 10 was Elon becoming a big failure as Ken predicted it. But that was number 10, Ken. So yes, Elon was definitely in there. But what was I saying? Oh yes, for those of you who joined late, I'm trying to say the word fantastic a little bit less than I normally do. So, which is funny because I'm probably saying it 10 times as much as I normally do in explaining that I'm trying not to use the word fantastic. So anyway, that might be a running gag through today's video. We'll have to see. All right. So the collapse of tech sector, that was easily number 9. Well, let's move on to number 8. Number 8, we're going to go over to our good friends, China, COVID, and that darn supply chain. So COVID, we all not big fans of COVID. Obviously, COVID completely messed up a lot. Almost everything in here today is in one way or another a result of that pandemic because it certainly caused a lot of chaos. But in China, they did not help. They did not do it right. Instead of using good vaccines that work, they kind of used their own shoddy vaccine that doesn't really work. And then they went to this whole zero COVID where they just shut down everything. So shutting down entire cities because a few people have COVID, well, that really, really impacted, of course, the supply chain. And when we were talking before with the tech collapse, the collapse of tech, a lot of that can even be contributed to the supply chain issues that China created. So that shortage of chips, some of the big gigafactories. So Tesla has a big factory there. Apple has a big factory there. They weren't able to get their products out. They weren't able to meet the demand. Now the demand has come down now, but at the initial part of the year, they were running into issues right away. And that did not help at all, no matter what. Um, our sapper thinks that number one is crypto. The friggin' Oracle thinks that aliens are number one. I don't recall reading about aliens in 2022. Well, other than some of that stuff that the U.S. Government has been doing, where they've been investigating. I guess they call them unexplained aerial phenomenon now, so UAPs. But anyway, we're not going to aliens there. But I thought that was a funny answer or funny guess. So yeah, that's one of the big issues that we've been having with China. And we, of course, had a massive supply chain issue when all of these ports in China were shut down because of COVID. You just had stuff piling up and up. And there was a lot of other causes, of course, of the supply chain issues. And luckily, supply chain is starting to become less of a thing. As we move towards the end of the year, China also ditched that whole COVID zero idea, which is great because honestly, if they had kept that up, it would have turned 2023 worse into something worse than what it's already going to become. But we're not going to actually dive too much into 2023 today because I got a video on my predictions for 2023 that, when this live stream is over, go check that out. And that'll give you my idea on where I think things are going in 2023. So right now, China, they are recovering. Things are moving. We're also looking at, the United States, for one. They're moving away from Chinese products, especially when it comes to, technology products like chips. So the U.S. wants to actually start doing a lot of chips in-house, so in the United States. And they're also looking towards Canada for some of those critical minerals, opposed to getting them from China. So that's kind of an interesting thing that could be great for us in the future. We'll have to see how that all rolls out. But that's number 8, China, COVID, and that darn supply chain. Holy banana bread. All right. Let's move on to number 7. So number 7 is employment and real estate woes. So we had definitely a lot of woes in both employment and real estate. We'll start with let's start with employment. One of the big issues that has been occurring is we've also been working into this whole labor shortage. So what exactly is that all about? Well, there's a couple things going on here. One, there's a lot of people who are in the lower income brackets. During the pandemic, they had a lot of extra money. They had a lot of supports. So some of them got themselves trained so that they could get better jobs, so that they could get out of that minimum wage role. So that left some vacancies as well. In addition to that, we also have the issue with the baby boomers. So we got a couple of issues happening. So what's happening with the baby boomers? This is an issue we've known for a long time is coming. And it has nothing to do with the pandemic, interestingly enough, although the pandemic did help it. So what we're looking at is we've got a situation where baby boomers are at that retirement age, and some of them are working into retirement, absolutely. But we have a lot of baby boomers who are leaving the workforce. As those baby boomers leave the workforce, normally we need to fill them. We need to backfill those roles. But we're at a situation where more baby boomers are leaving the workforce than we have new people entering the workforce. And that is creating a job deficit. This was coming. And when the pandemic hit, what ended up happening is it kind of kickstarted this a little bit more than it should have. So there were a lot of people who are getting really, really close to leaving the workforce. And then all of a sudden you got a pandemic and they're like, yeah, I think I'm getting out now. And that's what happened. So you had a lot of people move up their time scale, people who had, of course, had the finances and had, had the retirement set up, hopefully that's the case. I know there are a lot of people who are in retirement age who are still working because they don't have a choice. And, we'll talk a little bit more about that later when we get into some of the other economy issues. But it's kind of sad that that's kind of where we're at. Now, we should have had more time to prepare for this, but we didn't really. Um, and as I said, with the pandemic sort of accelerating things, it kind of took things off of the table. Um, we definitely need more automation, things like that, just to make up for some of these jobs that are out there. But that's the interesting thing. This whole job situation, it's going to impact a lot. Like, that's the neat thing about this year is that when we look at our list of 10, most of these things are so intertwined with each other, which it's just ridiculous. So, for example, the job shortages are intertwined with some of the supply issues that was coming up with the China point. Now, not so much China, but on this side of the of the ocean, we had a situation where some of these job issues were impacting everything from, well, I'll give you an example. In the U.S., some of the railroads were having issues because they could not meet the demand for their product, hauling product, because they didn't have the personnel to do it. And that was all labor shortage issues. They also, of course, had union issues as well and strikes and things like that. We almost had a strike on CN with CN and CP up in Canada, but both of those were averted, luckily, because railroads are, of course, our supply chain backbone, and we don't want to see that happening. Now, I was mentioning employment and real estate woes. Now, the real estate side of this equation is that even though we had record low unemployment, we had an issue, of course, with houses. And that issue we were having with houses is that we had a massive bubble of price during the pandemic. Houses went absolutely bonkers. Now, by the time we got into 2022, houses were getting a little bit ridiculous, but then they began coming back down. And the big reason for that, of course, is higher interest rates. And we're going to touch on that in another point a little bit later. So those higher interest rates, what they're doing is they're making mortgages a lot more expensive. So people just can't afford some of these mortgages. As a result for that, and somebody who's thinking about getting a new home, they're now renting instead. And because of that renting, we've got this massive amount of people who are looking for rentals, which means that landlords can pretty much charge as much as they want. Obviously within reason. There are certain legalities to it. But we were now in a situation where rents are going higher and higher. And that's an interesting thing. It's kind of that thing where if you right now don't have a place to live, you're going to have a hard time finding a place because we've got record low vacancies with very, very high rents. If you currently live in an apartment and you're thinking, I'd like a better apartment, now is not the time to be doing that. So keep that in mind. All right. Now, that was number 7. Let's take a look here. And let's move over to number 6. Now, this is one I like. So the rise and fall of oil. Oil, gas, natural gas, energy in general. It's had a really good year. We've seen the prices of oil go crazy. We've seen oil above $100 a barrel. Energy companies, so oil, gas, whether you're mainstream, midstream, and energy companies as well, have been making record profits. So for people who love dividends, companies like Torlamine, for example, had a pretty massive dividend, a special dividend this year, because that's what these oil companies have been doing, is they've been taking a lot of these profits and giving it back to their investors, which is great as investors. Now, what the big issue is as we were moving through the year, we were also heading towards a midterm election in the US. And because of that midterm election, one of the things that Biden wanted to do to try to get as many Democrats elected as possible is to try to ease that gas price. And one of the strategies they did is they started pumping stuff. Well, I won't say pumping, but they started releasing oil from the U.S. Strategic Reserve. So they have released a crazy amount of oil, and that has helped bring down some of the oil prices. So oil is now, it had kind of from the fall, basically from about the fall on, oil really, really fell. Oil got down as low as $70 a barrel. And right now we're kind of in that, I think right now we're around 79, if I remember correctly. So oil has struggled a little bit in the second half of the year. And there's been, some prices have come down. But at the same time, these companies, these oil companies, they're still doing well. They've still made a lot of money throughout the year, which is fantastic. Oh, there's that word again. So they still made a lot of money throughout the year, and that's great. But here's the thing. What's going to happen in 2023? Well, we're not going to go too deep into 2023, but what's going to happen in 2023 is that those prices are going to go back up. We've got that strategic oil reserve that is pretty much, it's not empty, but it's very low. The US does have to replenish that. So there's a lot of stuff that's going on, which is going to be very, very interesting. Okay, so that's the whole oil and anybody sort of oil adjacent. It's been a great year for investors. It's been great to see it. It hasn't been a great year, though, for people who are relying on energy. So, for example, we have an energy crisis in Europe, and a lot of that has to do with Russia, with the Russia-Ukraine war, because that has cut off so much oil. We've also got oil prices being capped that Russia can sell now. And Russia's kind of at the point where it's like, well, if you cap my oil, you're getting no oil. And so they're only selling to countries who pretty much are not capping them. So it's really kind of a complicated situation when it comes to the whole oil situation. But is that going to resolve itself in 23? Probably not. It's probably going to be a pretty big mess. All right. Now, Scott's mentioning here, might be time to add some oil to the TFSA this coming year. Yeah, absolutely. Oil is going to be going back up. There's no way ands if about it. That's one of the things I like about oil investing. And anything oil, when you're investing in it, even if oil goes down, it's never down for long. It doesn't take, all it takes is for, OPEC to start cutting production and it starts pushing that price back up. And there are oil stocks that are starting to have some pretty half decent dividends. So it's not a bad sector to be looking at. Definitely one of my favorite sectors. Yeah, so that's oil. So fantastic. Okay, let's move on. Let's move on to number 5, because we're about halfway through the show, so we should be hitting 5 about nowish. All right, what do we got for 5? Oh gosh, yes. So for 5, the question of the year was to recession or not to recession. So people have been, ever since the economy started to absolutely started heading south in the beginning of the year, people have had the R word on their tongue for most of this year. Are we in a recession? Is it a technical recession? Why hasn't the US called a recession? And to be honest, the reason these recessions have not been called, a lot of it is, a lot of it goes right back to that job situation. One of the big requirements for a recession is a certain level of unemployment, and we simply don't have it. And we're doing even a little bit better, I think, in Canada, because we're actually getting some positive GDP numbers. So things are close. Like everybody knows a recession's coming. Most of the financial institutions are calling a recession for 2023. And even myself, I do think we're going to see a recession in 2023. But here's where that job thing is going to help us out. I think because our job market is strong and is going to stay fairly strong, I think it's not going to be a bad recession. I think it's going to be a short-lived, maybe moderate recession, which is great. Now, there's always the chance I'm wrong, and I hope I'm not. But that's what I'm thinking when it comes to a recession. But that's been one of those things. We have a situation where so many people are thinking about that recession that you do have some companies, especially in the tech sector, that have already started laying off people. They're like, okay, we got to start laying off people. We got a recession coming. We got to tighten our belt. Now, as investors with a recession coming, one of those things you want to do, well, there's a couple of things that you really want to do. One, you want to start addressing your debt. If you've got high interest debt, do whatever you can to reduce that as much as you can before a recession. And two, if you've got the availability of investing money, well, as we move into the beginnings of that recession, and even, well, heck, even right now, we're in a situation where prices are pretty low. There's a lot of buying opportunities out there. So that's one of those things to keep in mind. Do your due diligence, do some research on some different companies. But there are companies out there that I think we got really good deals on. You know, Especially, I'll give you an example. The banking sector. Right now, you're getting higher dividend yields than you would normally see with a lot of the bank stocks because their price is down. And the reason the financial sector is in bad shape at the moment is because, well, a lot of people have been defaulting, businesses have been going bankrupt. So they've been absorbing a lot of debt that way. And that does impact because they will budget a certain amount. But when it goes more than that, that really does impact the banks. So that is one of those things I think that's really, really interesting, at least with where we're at. So to recession or not to recession, there's always the chance, and this is a small, small chance, that in 2023 we don't see a recession at all. I would be really, really shocked, but it's a possibility. And there are people out there that right now that will say we're in a recession, they just won't call it. And sometimes that's true. Sometimes when they call the recession, you're already halfway through it and you're almost on the way out. And here's the beautiful thing. We're always talking about this bear market, but normally about halfway through the recession, that's normally when you start to get the beginnings of that bull market, which is when, as investors, we can see all of that hard work we've put into buying cheap stocks. We can start see those inflating our accounts a little bit. There's a cat off in the distance meowing, which is, it's not fantastic at all. It's just a cat meowing. It's really interesting. When you see my video tomorrow, you'll hear the sounds of animals running because it didn't matter what I did today. There were cats just running around the house while I was filming. So I did my best to get most of it out, but you're going to see some of that now. All right. Now, keep in mind, we're still at number 5. We still got 4 more to go. Still looking for guesses here on that first, on what you guys think the number 1 news influencer of the year when it comes to financial markets is. So we'll have to see if anybody gets it right. We got a couple of guesses. We got a crypto guess from our sapper. And, well, the friggin' Oracle came up with, he tried to come up with Elon, but Elon was at 10. But then he went to aliens at number 1. So for those of you who are late to the party, let's just recap where we're at right now, and then we'll move on to number 4. All right. So at number 10, we had what the banana bread is going on with Elon. At number 8, we had the collapse of the tech sector. At number 7, we had China, COVID, and that darn supply chain. At number 7, employment and real estate woes. At number 6, we had the rise and fall of oil. And at number 5, which we've just finished, is to recession or not to recession. That takes us to number 4, which is rate hikes versus inflation. And, we got another guess here. Donald Trump. No, Donald Trump did not make the top. Oh, I'm not supposed to spoil anything. That's a good guess, Jordan. Maybe we'll have to see. Sorry, Riley wanted out of the basement. Oh, okay, yeah. I think Riley was in the basement and was meowing to get out. That's where my studio is in the basement. And so I normally close the door when I'm doing a live stream, but I think the kitten is actually down here sleeping right now. So that is awesome. Okay, so rate hikes versus inflation. So obviously one of the big driving forces of this year has been inflation. We have seen the price rising in everything, from fuel to food, rents, you name it. It has been there. So that's interesting. And let's see, Ukrainian-Russian war. That's another good guess. Maybe we're gonna find out there, Jordan. Um, so price inflation. So with inflation getting out of control at first, I think the Bank of Canada, as well as the US Fed, thought it was transitory, meaning that it was just going to take care of itself. We don't have to do anything. Well, because of that, they were a little bit late to the party when it comes to the only tool that they have, and that's those rate hikes. So once they began hiking rates, that's when, well, that's when a lot of the other chaos started beginning when it comes to like the housing market with all of the mortgages going up. Um, we've seen as well just interest rates right across the board. So the level of debt is getting bigger and bigger as a result. So that's it's a hard fix to fix inflation, but it has slowly started to at least take a bite out of inflation. Not a big bite, mind you. It's pretty much, well, at this point, we're kind of at that point where it's stopped it from rising for the most part. Although, the last core inflation we had from Canada, it did rise a tiny, tiny, tiny bit. But here's this thing, though, and this is what worries me the most, is that because of oil coming down, oil is a big driving force of inflation because when oil's more expensive, it costs a lot more money to move stuff around. And that is just, oh, that's not good because that will impact the prices right across the board from everything they sell you in the grocery store to everything in any stores. I mean, it's just, if it costs more to transport things, that will get passed along to us. So with those oil prices coming down, that has helped inflation. But if, as I think, oil's going to start going back up again in the new year, well, this year, that could cause inflation to take a little bit longer, I think, than they're anticipating. So it'll be very interesting to see how that all pops up. And Paul says the rise of passive income investing. Ooh, interesting. Yes, and that is, and you know what? That's not it, Paul. But I just wanted to address that for a second. One of the things in a recession is people will start, especially investors. A lot of investors will start shifting more towards dividends, and part of the reason for that is that it's just nice to get some money back, and that's kind of what's nice about dividend investing. So there are some good choices out there. Like when you're looking at passive income now, there are some passive income that are probably set to do really well once we get to the other side. So that I think is really cool. So keep that in mind. Jordan says fuel surcharge, fuel surcharge on shipping with Canada Post is about 11%. Wow. Now, Jordan, do you know what it was last January? I'm kind of interested because I don't know. If you do, let me know because that would give us a sort of a comparison from where it's at now to where it was then, if you know. Yeah, so rate hikes, they're going to continue into 2023. They are going to get smaller. I am in my prediction video, I did say that there is a chance of some small cuts in the fall, but I don't see that before then. I know some people, I know Jill actually believes that you might see cuts sooner than that, but I'm not thinking that. I'm just not seeing that yet. And a lot of it I think will do with oil. If oil starts to pump soon, then we could be in a situation where we're not going to see any of these rate hikes getting bigger anytime soon. So that's one of those things to keep in mind. Oh, there wasn't one. Okay, well, there we go. From nothing to 11%. That's crazy. That is definitely crazy. They'll hold off on any cuts for as long as possible, according to Scott. Yeah, I don't think they want to. I think it's going to be a situation where they're going to raise the rates too high, and they're going to overshoot their mark, and that's going to be what causes them to do some rate cuts later on. But we'll have to see how that works. I think 2023, if you look at it from a financial perspective, I think it's going to be a very interesting year. So that's one of the things I definitely am looking forward to. Okay, let's That was number 4. Let's move to number 3. Number 3. I'll get rid of 4 first. Number 3, crypto implodes. There we go. So that was actually one of the guesses. Was that? Lost my tongue for a second. I'm just scrolling up here to see who that guess was from. I believe. Where is it? I think I finally understand why I should star things in case I might have to go back to them. Oh, our sapper, that's who it was. Absolutely. So our sapper thought crypto might be number 1. The crypto thing was big, absolutely big. But number 1 and 2 are also absolutely big. So the fall of crypto is absolutely devastating. I mean, crypto went from some serious all-time highs towards the end of last year and has fallen an incredible amount. So it's a situation where I think a lot of people who were all hyped about crypto when it was at its all-time highs, there was a lot of people who were buying crypto at, between $50,000 and $60,000, especially with Bitcoin. We'll just use Bitcoin for an example, and now it's worth less than 20,000. So there's a lot, and sadly enough, a lot of people who did that ended up selling. But I can understand that because I know that it's going to take, I don't think, until we actually have regulation, I don't think we're ever going to get up there again. And that's only because there's a lot of fear. So there's a lot of FUD surrounding the whole crypto market, especially when we look at the fact that we're not just the price of crypto collapsed. We had so many issues with the exchanges, starting with Celsius and, I would like to say ending with FTX, but no, we're now at a point that I think in 2023, we're going to see some more. Kraken is starting to slowly worry me a little bit. So we'll have to take a look and see how they are going to go. But crypto has had a bad year. Absolutely. So we'll have to see how that all works out. I think right now, what we need to get crypto back on track is we're going to need that regulation, because that's the only way you're going to get some of these institutional investors to come in. You take a lot of the, a lot of retirement funds and things like that. Those really, really, really need that regulation before they'll ever move into that field. There were, I think, the Nova Scotia have the Ontario Teachers Union, and I think a teachers union in Quebec as well. I think both of them, over between Celsius and FTX, lost money. So we've already seen, the few of these who are daring enough to get in sooner, before regulation, have been burned. So I think without regulation, we're not going to go anywhere with crypto. I hate to say it. I know that we have some people who are big, big crypto fans, and I want to be a big, big crypto fan. But show me the regulation, and that'll take us one step closer to that. So cryptos, yeah, the fall of crypto coming in solidly at number 3. All right, let's move to number 2. So what is number 2? Number 2 is the bear market strikes back. So yeah, I mean, the bear market, that has dominated almost all of us when it comes to investing. There's not much you can really say. We watched the S&P drop. We watched the TSX drop. NASDAQ, well, pretty much they met the mole people. It's been a rough year when it comes to stocks. Now, you got to keep in mind, one of the biggest problems is that so many people who joined the market, so many people became investors over the pandemic, that there's a lot of people who have just not seen a bear market before. And unfortunately, a lot of these people were buying in bull market conditions, and all of a sudden they were watching their money bleed away. And a lot of people lost money because it's amazing. There was actually there's a statistic out there that actually says that most people actually buy high and sell low, which is the exact opposite of what you need to do if you want to make money. So too many people, I think, they just weren't prepared for a bear market. And I think even when you look at YouTubers who are like saying, there's possibility we're going to run into another bear market, I don't think they understood exactly what that is, or that they kind of got themselves in the sense that, oh, times are good. They're never going to falter. It'll just keep on going like this, forever. And it doesn't, though. It turns around. It can turn around on a dime. And that's kind of what happened. We're now into that bear market. Things have fallen down. I don't think we've hit the bottom yet. I'm thinking that you're going to see the bottom by spring. And then when we get into the fall, that's when I think you're going to see that ramp up back towards the bull market. But, here's that thing. People love, especially investors who are like, okay, yeah, all right, I can deal with this bear market. I'll wait for the bottom and I'll buy then and make a ton of money. Problem is, I'm speculating that we're going to see the bear market in the spring, or the bottom in the spring. Nobody truly knows. Most times you don't know the bottom has happened until well after the bottom has already happened. That's why dollar cost averaging is that way to go, because at least that way there, you're going to get a very fair price over these low days. And maybe you miss the one day that was the very, very bottom if you do, like, maybe if you buy once a week or something like that. But you're still going to do better than the person who saved all their money and then completely missed the bottom, and they end up buying on the way back up. So dollar cost averaging, it is your friend when it comes to trying to time the market. As Warren Buffett, well, actually, Warren Buffett wasn't the original one that said it, but everybody credits it to Warren Buffett. But there's that whole thing where it's like, time in the market is better than timing the market. So, keep that in mind. That is one of those things to keep going. All right. So we've only got one left. We got number one. We had a few guesses, and yes, somebody did guess it right. So our number one big thing in the year, let's get rid of two and we'll bring it up. It was the war in Ukraine. The war in Ukraine has caused lots of issues to the economies of the world. So what type of issues has the war in Ukraine? First of all, it's created food shortages. So that's big time. It's created energy shortages in Europe, which, if you think about it, that has really, really, really helped with everything that was going on with, sorry, I got distracted for a second because I saw banana bread. All right. And yes, Jordan, you did guess that too. So, and somebody else, I think I thought two people guessed it, but maybe I'm wrong. So yeah, the war in Ukraine has caused lots of issues, lots of problems with the economy, and it's not looking to let go. It's looking to keep doing that going into 2023. But everything from, you take companies like Nutrien, the big, massive amount of money that Nutrien has made over the year is, you can pretty much say that the war in Ukraine has caused that. Canadian food products have become, Canadian wheat, Canadian grains have become more valuable because of this. Potash has become more valuable because of this. Canadian fertilizer has become more valuable. When it comes to energy, you got Europe who's crying for energy. And all of this is going to, if we go to hydrogen, which is one of these things that Canada's been working on creating, green hydrogen. Germany is working with Canada to try to get some hydrogen going, because everyone's looking for alternate sources of energy because, well, with that shortage. Now, luckily, though, and I'm going to put this out there, luckily it hasn't been a super bad winter in Europe yet. So that's a good thing. And that also helped knock down the price of oil a little bit. But, winter's only just begun. Winter officially just began about a week and a little bit ago on the 20th or the 21st. So there's still a long way to go when it comes to winter. Although, yes, I know right here it doesn't feel like winter. Like I think it's above I think it's like 4 or 5 degrees, something like that. Most of the snow that we had is already melted, which is kind of nice. But yeah, it's kind of one of those things. Now, Jordan says here, never did I think I'd be happy war was the answer. Good. I'm glad to hear that. Yeah, no, I would love to. I mean, I love to have a great movie. I love when things benefit Canada, but that's not how we want that to happen. So, there's going to be continued. I think some of the shortages are going to still continue into 2023 as long as this war continues. And I don't see an exit strategy for either side. Ukraine has pretty much said they're going to fight. They're just going to continue to fight. I don't think they want to give up any land. And I think Russia's in the same situation. They're at the point that it's almost like if they were to back down, it would look pretty bad on, it would look bad on them, of course. Well, I mean, it already looks bad on them. There's so many sanctions. But we'll have to see how that turns out. It's one of those things. I don't like to make guesses on wars because, it's one of those things where I can only hope that there is a resolution in 2023 to that conflict, so that people, and it seems crazy. It's kind of funny. Like before this, I never thought we'd see another really big war. I thought, with people worried about climate, I mean, you take all of those missiles that are raining down in Ukraine. That is really not good for the environment, or of course Ukraine. So I'd like to just see this all end. Yeah, it's just one of these things. It's just a travesty that we have to see something like that happening on the planet now. Like I feel like we're evolved enough that we shouldn't have to, be worried about war or that, somebody's going to escalate war. It'd just be great if we had a more peaceful planet. That's for sure. But anyway, that's kind of what I was thinking. Now, I did miss this from Scott. Says rough year for everything. Yeah, absolutely. So that was it. Number one, the war in Ukraine. We are through the 10. Big. Now, in the comments, if you guys think there's something there that's big that I should have included but didn't, throw those in the comments. I would be happy to talk about them. As we're doing that, I'm going to talk a little bit about what's coming up on the channel. So before I even do that, if you haven't hit like yet, guys, hit that like button, turn it blue. It really, really helps the algorithm and helps everything along that we're doing here when it comes to the live streams and everything else. Okay, so coming up this week, tomorrow, we've got an ETF. So we're looking at right now, I think it's 6 ETFs that are above 10% dividend yield. I'm also introducing a star system. So when I break down these ETFs, every so often, I will include the stinkers because, if you don't see the stinkers, you don't know they're there. So I like to include the stinkers so you can sort of see, oh, you know what? This one does have a high yield, but it's very problematic. So now what I'm going to do is I've started creating a 10-star system. So every single stock that I review in these lists are going to get stars. So that you'll have to check that out tomorrow and see how that works. And I'm going to iron out exactly how I, award points. So, I used a few criteria yesterday and I'm going to just iron that out as well. Cause I'd like to get that as just a regular part of the show. Now I do have, I'm going to do the first battle. I mentioned, if you guys saw the changes, so with the deep dives, we're now going to do like sort of deep dive battles. Now, I had a request that I do BAM versus BN. So, because as you guys know, Brookfield Asset Management split into 2 little companies. And somebody asked, and they said, you know what, you should do a battle on those 2. And I was sitting there and thinking like, well, yeah, I kind of thought it was one that was in the back of my head, but I'm like, you know what? Let's just do it. So Thursday, we're going to do BAM versus BN. Oh, here's somebody who likes that. So yeah, that'll be the thing. And I will tell you, I anytime I'm over on Scott's channel during his live streams daily at week daily at 11 a.m. Eastern, he's got people asking him about BAM and BN constantly. So now all you got to do, Scott, is just refer them to this video when that comes out on Thursday. Saturday will be a video day this week. I mentioned as well about the financial IQ, so FIQ. We're gonna kind of drop. I think it's more or less just a what it is. It's going to be more of an informational video on what I'm looking to do with FIQ, but that's going to drop on Saturday. And the following Saturday, just to let you guys know, that will be the video for the channel members. They're getting their video a week from Saturday. So if you're interested in seeing that video, well, become a channel member today and you'll have access to that as well. So that's what we got coming up. I think it's going to be a really good week. And I'm really looking forward to it. Now, any of you guys who have not watched my prediction video, you want to watch it. And I'll tell you why. Because I am going to review those at the end of the year. And we're going to see how many I got right, how many I got wrong, how many were way off, how many were like so close you could almost give it to me. I think that's just going to be a lot of fun. So we're going to do that towards the end of the year. Whew. So I think that that's about all I got for you guys today. So we got about 4 minutes left or longer. It doesn't matter. I don't care what the time is. If you guys got anything you want to talk about, throw it in there now. If you don't, then I'm probably going to go catch some supper because I can smell stuff cooking. I think I can smell stuff cooking. I may not smell stuff cooking, but I think I do. I'm trying to think what it is. It smells like, I think it's fowl. I mean, as in chicken or turkey or I don't know. Not as in smells bad foul, but holy banana bread. That was not what I meant. Anyway. All right. Well, I guess that's it for today then. Everybody have a fantastic new year. Have a great new year. Have a happy new year. And we'll be seeing you guys again really, really soon. Look forward to what we got coming up for you this year. I think it's going to be a great year to be an investor. We're going to get you guys ready for the bull market for when it starts. Hopefully this year, as I've been predicting. So until then, I'm just going to say we're going to leave it on Jill's comment. Happy New Year. I'll just quickly say thank you from Scott. Gotta love Scott. Once again, check out his channel, Create, Save, Invest. Live streams every single day at 11 a.m. Eastern. And we're leaving on Jill's comment. Happy New Year. Have a great one, everybody. And we'll see you again very soon. Take care.